Hi, I'm Garth from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So I'm starting with a bigger picture look at both of these indices this week because we're starting a new month, so the beginning of March. So we look back at a monthly chart of the S&P 500 to begin with and have a look at the monthly candlestick pattern that formed in the month of February, and then we'll take a look at the daily chart. So let's take a look initially at that monthly chart of the S&P 500, as I mentioned. What's interesting to note here is that the month was quite strong at one point, and admittedly, it did close firmer for the month of February. But also note that there was a very long tail to the upside on that monthly candlestick pattern. And that's similar to what we saw in January. And I'd alluded to this previously, the fact that monthly candle in January saw a reversal. And the fact now that we've got two of these successive monthly candles with long tails to the upside indicates that the sellers have been quite active at the upper levels on this market. Now, that's not to say that it's necessarily a top, but it is worth noting that we have seen selling pressure coming in both at the upper levels in January and in February. And often those type of candlestick patterns can be an indication that there's some distribution happening at the upper levels, and it can perhaps precede a period of consolidation or a correction in the market. So it is worthwhile just noting those two monthly candlestick patterns as we head into March now. If we then take a look at the S&P 500 on a daily basis, there you can see that what's happened recently in the last couple of days is that this market has managed to hold above the 50-day moving average, and that is quite a clear indication of general rising momentum still in the S&P 500. At an upper level, 39.30 is quite important resistance. And if the market is able to take out that 39.30 level, then that would point to potential for the market to move back up and challenge those recent highs that we saw up at 39.50. And I would think quite likely that we'd then see a test of 4,000, the big round number. It would almost be rude not to go there if the market is able to break above 39.30. So do keep in mind that as a daily chart setup, but also, of course, keep in mind the fact that we have seen some distribution at the upper levels on the monthly chart as well. So if we do see this market pushing aggressively higher towards 4,000 on the S&P 500, then it will also won't be too surprising if we see some distribution happening up at those upper levels as well. Then let's take a look at the monthly chart of the Nasdaq. This is now showing you again the two shooting star candles that have formed in January and February on the Nasdaq. And this is actually more prominent on the Nasdaq chart than it was on the S&P 500 chart. But once again, you can see the long tails to the upside on those monthly candles for the Nasdaq index over here. Again, illustrating that there is actually some distribution happening at the upper levels. What's been quite topical of late is a discussion around the potential shift from growth stocks towards value stocks. And it is evident on this NASDAQ chart with a little bit of underperformance starting to emerge on the NASDAQ relative to the S&P 500. And that talks to the point of the possibility that growth is starting to wane slightly in favor of value stocks. So keep in mind this monthly chart, which does show now two successive shooting star candles with January and February, both registering those reversal candles. Then let's finally take a look at the daily chart of the NASDAQ. And what's interesting to note here is the support level at 12,800. That's a lateral support level that's been valid through January and February and now into March. And there was a gap to the downside in late February that comes in at around about 13,600. We need to see what happens if this NASDAQ pushes up into that gap and whether that gap acts as resistance. If it does, then there's a possibility that we could see the right shoulder of a head and shoulders pattern beginning to form here. So that'll be quite key to watch. And you can also see, as I've mentioned previously, that this chart does look as if it's actually somewhat more struggling relative to the S&P 500 on a relative basis. So 12,800 is the support level to watch there, and 13,600 is where the gap comes in and where we would potentially look for some resistance to emerge on that NASDAQ. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the NASDAQ indices.